Good morning, I'm Maiki Oreta and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. The headlines: the government's debt payments jump this year. Motorists using the NLEX Connector Road will face higher toll fees starting tomorrow. After a weak close last Friday, what can we expect for Philippine stocks this week? We'll hear from PhilStock's Financial Research Manager, Japet Tantiangco, later in the show. And in a world first, SpaceX, led by tech billionaire Elon Musk, pulls off a successful catch of its giant rocket booster. Now first, let's see how Asian markets are doing as we kick off the new trading week. So far, markets are up, with investors digesting China's much-anticipated finance briefing over the weekend. South Korea's Kospi is up by 1%, while Australia's ASX 200 has gained 0.3%. China's finance ministry hinted at more debt issuances to support the economy during a briefing on Saturday, but they didn't provide the specific numbers investors were hoping for. Japan's markets are closed for a holiday, and Hong Kong is back in action after a 3-day break. Over on Wall Street, U.S. stocks hit new highs last week as banks rallied. JP Morgan surprised investors with a boost in net interest income. The Dow Jones rose 1%, and the S&P 500 gained 0.6%, and the Nasdaq climbed 0.3%. Over in Europe, markets bounced back from early losses to finish up on Friday. The FTSE 100 inched up by 0.2%. Germany's DAX rose 0.9%, and France's CAC 40 increased by 0.5%. Over in the commodities market, oil prices are sliding after China's finance briefing failed to introduce new measures to boost consumption in the world's largest importer. Brent crude is now down over 1%, now below $78 a barrel. Gold is also slipping as the Fed's rate cut plans remain uncertain after a volatile week of U.S. economic data. Now, debt payments under the Marcos administration increased by 33% so far this year. Data from the Bureau of Treasury shows that debt payments have risen to 1.55 trillion pesos from January to August, compared to 1.16 trillion pesos during the same period last year. This means 75% of the government's 2 trillion peso debt service target for the year has already been spent. Two-thirds of these payments, or about 1 trillion pesos, have gone toward paying back loans, mostly from domestic sources. In August, debt payments dropped to 186 billion pesos, mainly due to lower repayments on domestic loans. This indicates that while the government is making progress in paying off more debt, particularly focusing on domestic borrowings, the higher payments are also increasing pressure on its budget. Travelers could soon pay higher airfare as airlines propose a new fee to cover the rising costs at the Ninoy Aquino International Airport. The Philippine Star reports that Philippine Airlines Cebu Pacific and AirAsia Philippines are asking the Civil Aeronautics Board to approve a terminal enhancement fee. If approved, domestic passengers may pay an extra 150 pesos for a round-trip flight, while international flights could cost an additional 300 pesos. This comes as the airlines want to offset higher service charges at NAIA as the airport's new management raised costs after taking over last month. Now, starting tomorrow, motorists using the North Luzon Expressway Connector Road will have to pay higher fees. That's 119 pesos for Class 1 vehicles, 299 pesos for Class 2, and 418 pesos for Class 3 vehicles. The Toll Regulatory Board says this increase is part of a plan to gradually apply full toll fees for the NLEX Connector Road. NLEX first set discounted fees in 2023 after opening the España to Magsaysay Boulevard section. The full rates will be applied when the entire connector project is finished. Now, overseas, Republican presidential candidate Donald Trump suggests he may impose tariffs of over 200% on vehicles imported from Mexico. In an interview on Fox News, Trump says that this move will stop the sale of Mexican cars in the United States to protect American car makers. Trump, who is in a close race with Democrat Kamala Harris, has previously promised a 100% duty on imported cars if he wins. Trump has a history of threatening high tariffs on Mexican cars, both as president and as a candidate in 2016. Automakers warn that such tariffs could significantly increase vehicle prices. Trump also wants to renegotiate the North American Free Trade Agreement to keep more car manufacturing jobs in the United States. In other news, Giorgio Armani, the founder of the famous Italian fashion brand, announces plans to retire in 2 or 3 years. The 90-year-old Armani, who has been quiet about his succession plans, told Italy's Corriere della Sera that his time leading the company is coming to a close. He admits that he often thinks about a future where he doesn't have to make every decision, but he also made it clear that he has no intentions of selling the company. With no children to inherit the brand, there is growing speculation about who will take over and if the company will remain independent, as the industry is largely dominated by luxury conglomerates like LVMH and Kering. Armani's expected successors, including his sister, 3 family members working in the company, his longtime partner, Pantaleo Dello Coro, and a charitable foundation. Now on Wednesday, we'll find out the Philippine Central Bank's latest interest rate decision. In August, the Bangko Sentral ng Pilipinas surprised markets by cutting its benchmark rate by 25 basis points to 6.25%, defying expectations of a hold. Also on Wednesday, the UK will release its September inflation data. Overall inflation held at 2.2% in August, but services sector inflation rose to 5.6%. Thursday will bring a likely rate cut from the European Central Bank. Analysts there expect a quarter-point reduction, potentially the start of back-to-back cuts as the regional economy faces uncertainty. Also on Thursday, markets will get a new reading on U.S. consumer health with retail sales data. Investors hope this will shed light on an economy that's proving more resilient than expected. And finally, on Friday, China will release its third quarter growth figures after a weak second quarter. However, Q3 is not expected to show much improvement. We're taking a quick break. Stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back to Basis Points. Trading at the Philippine Stock Exchange opened just a few minutes ago. Let's take a look at the initial figures. Right now, the market is in the green. PSE index is up by 0.8% to 73.69. Now, this comes following last week's 3-day losing streak. Now, all shares index is up by 0.4% to 40.29. The financials leading the gains here, up by 1.44%, as with the property counter that's up by 1%. Other gainers we're seeing buying in the holding firms, services, and mining and oil counters. Meantime, the industrial counter is going the other way, trading to the downside, just slightly down by just 0.1%. Now, meanwhile, at the foreign exchange market, the peso opens weaker from its previous close of 57.21 last Friday, opening at 57.28 against the greenback. Now, to help us make sense of these numbers and the PSE's direction, we're joined this morning by the research manager at PhilSox Financial, Japet Tantiangco. Hi, Japet. Good morning.
Hi, Ms. Maiki. Thank you very much for inviting me.
Okay, Japet, we've got some economic data out this week. On Wednesday, the Bangko Sentral ng Pilipinas, or Monetary Board, is going to be meeting to talk about interest rates. Do you think that they're going to opt for another rate cut?
Yes, I believe that the BSP is going to go for another rate cut in their upcoming meeting this week. Because if you're going to look at the data, if you're going to look at the current macroeconomic environment, it's supportive of further policy easing by the BSP. Number one, as we already know, inflation has been declining and it even went below the government's target last month. At the same time, the Federal Reserve is also on a policy easing stance. So we've got these positive factors at play, and given these, there is room for the BSP to cut policy rates in their upcoming meeting.
Which begs the question, how much room, how much of a rate cut are you expecting? Are you expecting a conservative 25 bips, or given that September inflation for the first time has fallen below 2%, this is a 4-year low, do you think that they could do a supersized cut? What are your thoughts on the actual amount of the reduction?
Well, as for how much, for now we're only expecting 25 basis points. Yes, we have a supportive inflationary environment. We also have the Federal Reserve, in a continuous policy easing, expected to do continuous policy easing. However, if you're going to look at the other side, first you have our production. GDP is still strong. It's still strongly growing. At the same time, our labor market data remains tight. I mean, the unemployment rate is still below the last 5 years average. So we still have a tight labor market. If you're going, and of course, you also have the local currency, which is currently on a decline, or it's in a depreciation against the US dollar. So if you're going to take all of these into consideration, what the data is telling us is, yes, the BSP has room to cut policy rates, but for now they cannot do it that aggressively because number one, the economy doesn't need an aggressive one yet, and at the same time, we still have the local currency to consider.
Correct, which has been weakening. Japet, there's going to be another meeting by the Monetary Board, the last one for the year. That's going to be on December 19th. All things considered, you're expecting a rate cut this Wednesday of 25 bips. Do you think that we might have another 25 bips cut in December?
Yes. It's possible that there will be another 25 basis points rate cut by December, but that would depend. That would depend on how the upcoming macroeconomic data will play out. If inflation will still be on a decline moving forward, or at least it will be kept within the government's target, then of course, and if the Federal Reserve is also going to continue with its policy easing, then we expect another rate cut by December. But as to how much, then that would again depend on the other side of things. The BSP is expected to look at the third quarter GDP growth data, and if it remains robust, and at the same time, if labor market remains tight, and finally, if the local currency will still show some weakness moving forward, then by December, the rate cut may only be 25 basis points.
Okay. Japet, given the expectations of a rate cut by 25 bips, we are at 73.69 right now. We're up about 14% year to date. Do you think the PSE index, with this rate cut, this forthcoming rate cut on Wednesday, do you think that we'll be retesting the 7,500 level over the short term on account of, lower interest rates?
Yes, I believe there's a possibility that the market may retest 7.5. I mean, first and foremost, the market is still at undervalued levels. Plus, we've had this decline last week, including a 3 straight drop in the last 3 trading days. So there is the possibility of a bargain hunting moving forward. Now, of course, investors would want to see a catalyst that would, compel them to do that bargain hunting. And we believe that at least the expectations that there will be a rate cut this week, the expectations on such is going to be that catalyst that would help the market move higher.
We're just under the 7,400 level now. Even if we, retrace the 7,500 level, at this level, would you say that that our market is undervalued with a PE ratio of about 14 times?
Yes. The local market is currently deemed undervalued, first based on our fair value estimates. As we've already mentioned before, the fundamental target that we're seeing for the local market is at around 8.2. So at its current levels, it's still deemed undervalued. Now, if you're going to look at the PE ratio, yes, as you've mentioned, we're trading at its current level. We're trading at around 13 to 14 times, and this is below its last 5 years average of about or a little above 18 times. It's also below the regional average, which is a little above 17 times. So both from a fair value standpoint as well as from a marketability standpoint, from a P ratio standpoint, the local market is deemed undervalued.
Okay, very supportive, Japet. Now, for the investors who want to catch up, for those that want to position ahead of the anticipated 25 bips rate cut this Wednesday, what are you telling investors to buy right now?
Oh, well, as mentioned, the index is still undervalued. A lot of stocks there are still at bargain levels. However, if you're really aiming for sectors, one of which the sectors that we can recommend, number one would be the conglomerates. A lot of our conglomerates are still at undervalued levels. As for the other sectors, like let's say the property, SM Prime is still undervalued. As for the banks, you still have Metro Bank, also undervalued. So those are the things. So those are those are the stocks that we are eyeing on in the index right now. You can also go outside of the index. There are some index. There are some there are some stocks outside of the index that still have good fundamentals as well as good narratives. So you have the likes of Aboitiz Power Corporation, Mega World, and Security Bank, FGen. So these are the stocks that we can recommend to investors like.
Okay, now moving on to the foreign exchange market, the peso. We saw weakness in the peso. The rate cut is going to be peso negative. What's your outlook for the local currency as we finish the year?
Well, with respect to the local currency, yes, I would agree that further rate cuts that will be done by the BSP would be negative to the local currency, right? It will cause the local currency to depreciate. But aside from that, we're also looking at other factors like for example, the Federal Reserve. How will the Federal Reserve proceed with its policy easing? If the Federal Reserve will be more aggressive than the BSP, then that's going to be positive for the local currency. Aside from that, we're looking at other macroeconomic data. Of course, we're looking at OFW remittances. We're looking at OFW remittances. We're looking at trade data. If you've noticed last week, foreign trade data has been kind of dismal. And this is one of the factors that has contributed to the depreciation of the local currency. So this is something that we have to monitor moving forward. This week, OFW remittance data is going to come out. And this is also another thing that we're going to watch. We're going to look into if these are going to be good. If we see good OFW remittance data, then this is going to help the local currency. And finally, of course, our overall balance of payments. I mean, if we see more balance of payment surplus down the road, then it's going to help the local currency. But if we see deficits moving forward, then it's going to be negative for the peso.
Yeah, it's an ever-evolving story. So good to have you share your insights with us, Japet. Thank you so much.
You're very much welcome, Ms. Mike.
That was Japet Tancampo, Research Manager at PhilStocks Financial. We're taking a quick breather. Basis Points will be right back. Welcome back. The Budget Department expects President Bongbong Marcos to sign the 2025 national budget before Christmas. Budget Secretary Amena Pangandaman says that the budget will be ready for the bicameral conference committee once the Senate approves it by the end of November. The bicameral process is expected to take about 2 weeks, so the budget could reach the president between December 18 and 20, just in time for Christmas. Pangandaman also mentions that the Development Budget Coordination Committee will hold a special meeting next month to review the country's economic targets through to 2028. Elsewhere in Asia, Indonesia's incoming president, Prabowo Subianto, is considering reducing the corporate income tax rate from 22% to 20%. An advisor to Prabowo says that this tax cut will depend on how well the government performs in collecting revenue. Prabowo, who will take office on October 20th, has set goals to increase tax revenue to 18% of GDP and to improve tax compliance. He also plans to separate the tax and customs offices from the finance ministry to form a new state revenue agency. Japanese Prime Minister Shigeru Ishiba vows not to interfere in monetary policy decisions. Ishiba stressed that the central bank makes its own independent decisions, so it's important to avoid giving the impression of political influence. Markets were surprised when Ishiba said that the economy was not ready for more rate hikes, especially since he had previously backed the Bank of Japan's move away from years of heavy monetary stimulus. His direct comments caused the yen to drop against the dollar and raised concerns about how aggressive the central bank will be with future rate increases. Now, before we go, SpaceX, led by tech billionaire Elon Musk, just pulled off its most daring test flight yet with its massive Starship rocket. For the first time, SpaceX successfully caught the rocket's huge booster using giant metal arms, bringing it back to the launch pad in Texas. This impressive catch happened about 7 minutes after the rocket took off on its fifth test flight. Meanwhile, the Starship kept flying solo into space before returning and splashing down into the Indian Ocean. This is a big step for SpaceX as they work toward making Starship a fully reusable rocket system that could one day take humans to the moon and to Mars. And that's it for Basis Points. I'm Maiki Oreta. We'll be back tomorrow for more news on the financial markets and more. Keep it here on BNC, the Billionario News Channel, always on top.